Welcome, Delta Traders, where great minds meet. Today we'll be riding the range of change, reviewing one of our days of live trading. To keep things exciting, I've increased the playback speed to 10 times normal speed. So let's get started. So here we are. It's July 12th, 2013. We're looking at our nice new fresh price action chart. I removed all of the ergodics and the Gantt chart indicators that I had on the previous charts. That way I could teach you strict price action. I do have a couple of elements, trending elements. One is the 90-minute at moving average right here, the exponential moving average, and the other is the 20-minute exponential moving average right here. Obviously, we have our volume at the bottom and then our bid-ask. On our volume line, the colored bars represent dojis, and the colored bars on our bid-ask line here represent the 1, 2, 3 price turnaround. I'm running at 10 times the speed right now, and I'm doing a playback so that you can see a lot more information in a lot less time. The real-time recording in real time, I know was pretty boring to a lot of people, and they just wanted to see the action trades of the day. Earlier in the day, at about 12:30, we received a doji here in green, followed by a 1, 2, 3 turnaround here in the blue, indicating a blue turnaround or a bearish turnaround. We didn't take that setup. We didn't take that trade because it happened in a bearish period of time. However, we were down here at a support level. Had this indicator happen while we were in a retracement, we would have taken the trade, but that wasn't the case here. We weren't in a retracement. So in other words, had the price gone down and then come back up a little bit and then start heading back down again, but remained in a bearish trend, and we would have received this doji and then the 1, 2, 3 turnaround, we would have taken that trade. For those of you who are new and have forgotten what a doji is a candlestick like this one here that doesn't have a body. And it doesn't have a body because it opened at the same price that it closed at. If something closes higher than it opened at, we have a green body. If a candlestick closes lower than it opened at, we have a blue body. But in this case, if it opens and closes at the same price, then we have a doji. And that doji oftentimes tells us that it's testing a particular price. Here we have a doji right over here at 215. And this doji here was tested this price. It was rejected. The price went up, and then it closed again. So we're looking for another doji. Here we're in a bullish trend. We know that because our two EMAs here have dots on them, and those dots represent the bullish trend. The price has gone up. Now it's coming back down into a little bit of a retracement. So as we're looking at this retracement, we're looking for opportunities where prices are being tested, perhaps on this support line, and then the price to continue, to bounce off that support line and head up in the other direction. So we're looking for a doji to indicate that. We will also trade on real small hammers, or hammers that have real small heads on them. Okay, but the doji is more indicative in what we're really looking for. Or we're looking for something close to a doji. Here we have a doji that happened at 2:30, at 14:30, right here in blue. It's blue because it tested down here, and it did bounce off of the support level. Following that doji, we have our 1, 2, 3 turnaround indicator, which is green, in the direction of our trend. So we're going to go ahead and take a trade right now. I'm going to put in a trade for 1669.50 and see if I can hit 1669.50. Okay, I did fill at 1669.50. Okay, I did fill there. So I put in a stop loss of 3 points. That stop loss is going to be way down at the 1666.50 level. And you'll notice that the 1666.50 is way below the level of the 1667 support level here. So our stop loss was placed way below that. You never want to put your stop right in the middle of the action. So that's a good way to get you in trouble. One of the biggest things that traders do is they place their stops too close, and they get stopped out before they can catch that trend. So in this case, we did really, really well. We set our target exit point at 4 points. So I'm either going to lose 3 points or I'm going to make 4 points. And again, for the beginners out there, the reason I set it at 4 points is because statistically, 4 points on this type of trade makes the most money with the least amount of risk. A lot of systems will teach you how to get into a trade, but then leave you stuck because you don't know how to get out of the trade. It's like walking into a casino. And I use this analogy in my gambler mentality video, where when you walk into a casino, there's never really a good time to walk out of the casino. So you really want to set your targets before you walk into the casino and know exactly when you're going home and not change that. And if you really think about it, it's true. If you walk into a casino and you're winning, you don't want to leave because you're winning and you're going to risk your money. And if you're losing, you try to spend more money to catch up. Same thing when you're trading in the markets. People start developing that gambler mentality, and we don't want to do that. So in this case, I set my trade. I bought long at 1669.50. It went down a little bit to 1669, and now it's at 1625. Now it's back up at 1669.50, and I'm going to continue to watch it. What I don't want to do is I don't want to get scared and stop my trade early or anything like that. I either want to lose 3 points or make 4 points. There are a couple of exceptions to that. If it starts getting close to the end of the day and you've been in this trade and it's not moving and nothing is happening and you have a little bit of profit on the table, you might want to take the profit off before the market closes. Or if you get into a situation where a strong downtrend starts taking place, in other words, you're up maybe 3 points and a strong downtrend starts to take place, well, you might want to pull out. But unless there's just some real strong indicator that tells you to get out, you don't want to just start getting queasy and taking your money out and keeping your trade short. You just don't want to do that. You want to make the trade and then, go have a cup of coffee or something. Now, you want to make sure that your stops are put in correctly and everything is working good. You don't want to cut yourself short that way. But, you don't want to hawkeye the actual trade. We're talking through it now because that's what I do when I go back and look at our daily trades. So we're at 1669.50. It looks like the market's moving quickly. It's bouncing around pretty quick. But remember, I have this played back at 10 times its speed so that I can show you the actual trade and what happened. I used to keep everything real time and just play back what we did in the room, that sort of way. But people were really bored and they wouldn't watch the entire video. Or new people would watch the video and get bored with it. I felt like it added a lot of credibility to the trades instead of just narrating the playback on our daily trades. But I found that it really doesn't matter. People would rather be not bored than go through all of the real-time rigmarole. So we're now up at 1670. I'm only about a half a point of where I started from. But if you watch that 20-minute exponential moving average, you see that it's taking off at a nice little curve. And a lot of people will say things like, oh, that moving average is pushing the price up. Don't listen to that kind of garbage. That moving average is history, okay? It reflects what the price was doing. So you can never go back in a chart, look at the moving average and say, oh, well, this happened or that happened because of that moving average. The moving average is a result of that price action. Everything really that you need to know is enveloped in that price. In price action trading, we eliminate a lot of the variables because we don't need to know what the news was. We just see that the price is changing and the price changes in particular patterns, and we watch those patterns. Now we're up at 1671. And the price is continuing to move up. We still have a little ways to go. We need to get up to the 1673 mark. So we really are looking at a resistance at about 1672. That concerns me a little bit. But one of the things that makes me feel a little better is the fact that our volume is pressing up a little bit. You see our volumes are continuing to rise. Another thing that we want to do when we enter in the basic trade, and our basic trade is called the Doji 123 reversal. When we enter into that basic trade, we want to make sure that we have a volume that is supporting the actual price. If we have prices that are making wild movements, but there's not much volume, that means there's nothing really supporting those movements. It's just, some institutions or something selling off some goods. We see we have a real big shoot up here within this 5-minute time interval. We're at the 1673 level, and we actually broke past 1673 to 73.75. I didn't fill at that point. We're continuing to watch what's going on here. See what this price goes. Okay, I filled at 1673.50. So I'm out with a 4-point gain. Held in for the 4 points. We knew that. I knew that last week, that when I trade this, I knew it a month ago, that when I trade this trade, I'm going to stay in for 4 points. And I did fill, and here's a good reason why we get out. We don't know if it's going to go up or go down. I just know that statistically 4 points is what I need to be in at for the trade. Actually, statistics, a 6-point trade makes as much money as a 4-point does, but you lose more trades, so it causes me personally a little more stress. So I like to go for the 4-point trade. So for the rest of the day, we didn't make any more trades, but we did make a 4-point trade. Remember, each contract is worth $50. So if you traded one contract and you made 4 points, you made $200. If you were trading 10 contracts, you would have made $2,000 minus your small commissions. Remember, Delta traders, ride the range of change.